Hi friends, welcome to our first October edition of your midweek real estate report. I'm Carrie Califano with the Porchlight Group here on October 6th today to talk about interest rates. Now I want to remind you before we start that I am in no way pretending to be a loan officer, but I just want to give you some basic information about current rates and of course encourage you to talk to your trusted mortgage advisor for further information. And of course, let us know if you need help connecting with somebody in the mortgage industry. So let's get started. Last week, the 10-year U.S. Treasury yield reached its highest peak since June. Well, why is this important? It's important because for the last 5 decades, there has been a very strong relationship between the U.S. yield and 30-year fixed mortgage rates. As you can see in the chart here, for almost 50 years, the 30-year mortgage rate has moved in unison with the 10-year Treasury rate. So the mortgage rate in orange and the Treasury rate in blue, you can see here ebbing and flowing together for the last 5 decades. While the first chart showed data from 1972 through 2020, this one here shows that the 2021 relationship between mortgage and Treasury rates remains consistent. And if you look at the red circles, we've called out that the increase that we're talking about right now, the slight increase, is being shown both in the mortgage rate and the Treasury rate as well. Now, you might be watching all this and saying, well, this all sounds great or interesting, but what is a yield rate and what impacts it? Well, according to Investopedia, there are a number of economic factors that impact Treasury yields, such as interest rates, inflation, and economic growth. Well, since there are currently concerns about inflation and economic growth due to the coronavirus pandemic, the Treasury yield spiked last week, and that spike impacted mortgage rates in the upward direction. So as we always like to do, we want to talk about what does this mean for you as a consumer and a client? Well, the powers that be, the economists that study this, they are all saying that they are expecting mortgage rates to continue to rise modestly, which will likely have an impact on home prices, causing home prices to moderate ever so slightly after increasing significantly over the last year. Everyone agrees that forecasting mortgage rates and interest rates can be very, very difficult. So your best bet is to keep your eyes on the data, stay connected with a trusted lender, and connect with us for real estate advice so that you can make the best decision possible for you and your family. As always, thank you so much for watching. This is Carrie Califano with the Porchlight Group, and we will see you next week.